We talk a lot about credit scores on this show. A lot, a lot, a lot. What is credit? What's your credit score? How does credit score work for newcomers? How do you improve your score? But how are Canadians doing overall when it comes to their credit health? And how has that changed over time? FICO is an analytics software company in credit scoring and financial insights. They collect credit scoring data and look at a whole bunch of financial behaviors for Canadians. Tommy Lee, Senior Director at FICO Canada, is here to talk more about how Canadians are faring and why they're faring that way. They've got a whole bunch of insight in a recent report. Tommy, thank you for joining us.
Thank you for having me, Bruce.
Canadians are very familiar with the word TransUnion, the word Equifax. They are less familiar with the acronym FICO. What should they know in the Canadian context?
Absolutely. So FICO is the leading global analytics company where we develop credit scores based off the data from Equifax and TransUnion, as you mentioned. So FICO scores are designed to measure credit risk that lenders use to make decisions about whether when you apply for a loan, you should be accepted for that loan, or what the interest rate should be on that product. So the FICO score itself is an important part of a credit risk evaluation that lenders make. It's a 3-digit number ranging from 300 to 900, where higher scores are better. And right now, the average FICO score sits at 760.
760. So the average Canadian score is 760. And what have you noticed has changed in that score over time, in particular pre and post pandemic?
Sure. So the average FICO score was around 753 right before the pandemic hit, and it increased up to 762 last year, and it's now fallen down to 760. I would say that 760 is still a very healthy credit score. And so for the most part, Canadians are managing their credit well. What we have seen over the past few years, right as the pandemic hit, the government provided a lot of stimulus and support. People were able to take out these COVID deferrals to defer their payment if they needed to. And so this really helped borrowers. And the average FICO score actually increased by 8 points in 1 year right after the pandemic because of all the support. The personal savings rate went way up. People were able to pay down their credit card debt. But now, since then, of course, we've had inflation, the higher price environment, high interest rates, and that economic strain has started to impact consumers to the point where they're starting to slowly increase the number of missed payments they have, as well as increases in credit card debt.
I remember well from, I don't know, high school math, mean, median, and mode. And we have talked about the mean, we've talked about the average. What else would you say in terms of the percentage of Canadians who would be in the upper limits of credit score and those who would fall below sort of the level at which they can qualify for a prime rate versus being subprime? So is it like, 40% above, 60% below? Give us a flavor for that distribution.
Sure. So the median FICO score is 777, which is a really strong score. Most lenders will approve you for loans and give you a good interest rate at such a high score. It turns out roughly over 2/3 of the population has a high FICO score to the point where they will get accepted for most products. And so what's important for consumers to know is that there are 2 really important categories of the FICO score and how they can improve them. One is to make their payments on time, and 2 is to keep their credit card balances low. And so that's one of the really important things that everyone should know.
Yeah. On time, every time, period, full stop, no exceptions on payments. The credit card balances are low. This is where there's I think some real myths. We call it utilization here most of the time, or at least on this show we do. And I think one of the things that's hard for people to wrap their mind around is it's not the number when the bill comes in. Like, you don't want to be, heading to your max. You never want to be close to maxing your card, even if you pay it off in full every time. Is that correct?
That's correct. Yeah, you do not want to reach near your credit limit. You want to be able to, yeah, as you say, credit utilization is a very important factor in the FICO score. It's actually the second most important in the FICO score calculation of this amounts owed category. And if you think about it, the FICO score is designed to predict whether you're going to make your payments on time in the future. So the most important category, number one, is whether you've paid your bills on time in the past. Not surprising, past performance behavior predicts future performance. And so, but yeah, when it comes to credit card debt, you want to use your cards. You don't want to go inactive, but you want to keep the balances as low as you can.
You look at some of the examples of types of credit and the health in relative terms amongst things like auto loans, mortgages, all that sort of stuff. What do you see across different types of credit? What's happening today?
Yeah, and so I was mentioning earlier inflation and high interest rates. So that's really impacted the entire Canadian industry broadly. And so whether we're looking at auto, bank card, mortgage, we do see that missed payments are increasing across all these different product lines. We did see that credit cards the delinquency rate on credit cards didn't increase as much as the other two products, but it should be, of course, noted that credit card delinquencies generally are higher. So for example, 8% of consumers missed a credit card payment in the last year, where that's only 2% for auto and 1% for mortgage.
You also flag increasing debt levels. The average credit card balance is now almost $5,900, which is about 5% higher than it was back in 2023. When you consider that balance, is that the outstanding balance after they have paid their minimum, or is that the revolving balance at any given time and many Canadians would pay it off in full, and that number, they would not be paying interest on that number? Help me understand what that number means.
Right, and actually that brings me to a good point. Is the FICO score uses the information on the credit report provided by Equifax and TransUnion. So it's whatever is being reported on credit file that will be impacting your FICO score. And so the balance that the credit bureaus will report is taken from the lenders, whatever the lenders report to the bureau. And generally speaking, we see that it's usually the statement balance. So whatever money that you had to, whatever your statement balance was last month is what's reported on your credit file today.
So it's not to say that most Canadians are paying, 20% interest on $5,900. That's not the way to interpret that.
No, that is not the way to interpret it. It is simply the amount that they owe from the previous month's expenses. But as you're right, many people, and it's a good practice to pay your credit card balance in full so that you don't have to pay that 20% interest.
Yeah, I'm evangelical about that one, just so you know. It's one of my gotta do's. One additional point I want to talk about is heightened demand for new credit. So almost 34% of Canadians opened one or more new accounts. That number seems really high to me. How is that reflected in history? Is that a higher number, or is it always that much?
Compared to pre-pandemic levels, it's pretty similar to where we were back in pre-pandemic times. And so we have seen it increase as there was a slow decline in new credit openings right after the pandemic, but it started to increase back to where pre-pandemic levels were. And a lot of this is, again, related to the macroeconomic environment, where people are experiencing some economic strain and they want to take out loans to be able to purchase that car or their first home or a new credit card.
We talk a ton about payment history. We talk a ton about utilization. We talk a lot about credit history. We talk about public records, whether or not there's a consumer proposal or something like that on their file. We don't talk all that much about diversity of credit, the mix. How much does that affect the score? So whether you got 2 credit cards and a line of credit and an auto loan, how much does that help or hinder you?
Yeah, thank you for asking that question. It gives me a chance to kind of break down how important each of these categories are to the FICO score. So for instance, the payment history, whether you make your payments on time, is 35%, the most important. The second one is the amounts owed, like on your credit card balances and utilization. That's second most important. That's 30%. You talked about length of credit history, so how long you've had credit. That's 15% of the score calculation. A couple other of the minor categories are what we call searching for new credit. So whether you are looking, you're making credit inquiries, you're applying and receiving new loans, that's 10%. And then as you mentioned, the last category is credit mix, which is 10% of the score calculation. And so here, what's really important to know is that you don't need to go out and open 20 credit cards. That doesn't really help your credit mix. What helps your credit mix is having at least one active credit card, and ideally one either auto loan or mortgage or other type of installment loan. But you can still have a high score even if you really only have one active credit card. If that's really all you need in your current financial circumstance, you can still have a very high score with that.
Really interesting stuff. Tommy, thank you for joining us to talk credit scores today. We really appreciate it.
It is my pleasure. Thank you.
Tommy Lee, Senior Director at FICO Canada, was here to talk about not just credit scores and the importance of the things that drive those scores, but also some of the trends over time for Canadians.